What you didn't hear at Davos. Everyone heard about Greenland, Mark Carney, and Trump at Davos. But here's what barely made the headlines and matters far more for capital. This year, around 3,000 participants from 130 countries, including more than 800 CEOs and dozens of heads of state, were in Davos. That's not commentary, that's the global allocation agenda being set. Sustainable assets globally are now over $30 trillion, dollars, and nearly half of family offices already invest in sustainability, with Europe leading adoption. Nature finance, blended capital, and transition infrastructure were explicitly flagged as priorities by the World Economic Forum. Mark Carney's message was blunt: the world is in rupture, not transition. Private capital has to step in. Now, the family office POV, what you didn't hear on stage. Behind closed doors, families weren't debating politics. They were asking, where do we hedge geopolitical risk? Where do we get inflation protected real assets? And where is the transition creating mispriced alpha? Many UHNW families were looking at energy transition infrastructure, nature based assets, and defense adjacent technologies, not as ESG plays, but as strategic portfolio moves. The subtext was clear: impact and security are converging into the same asset class conversation. What does this mean for entrepreneurs? If your pitch doesn't clearly map to resilience, transition, or security driven returns, you're invisible to private capital, no matter how good your tech is. The glass box teaches you how to position your company for this capital, how to speak the language of family offices, align with their capital buckets, and turn impact into investable alpha. If you want family offices to take you seriously, you need to pitch like they allocate.